Thank you very much for coming, for staying after lunch, first of all. Now that we had Brett King talking to us about the future, we had the regulator talking to us about new regulation, I think it's a very nice panel that we will just exploit in the next hour, which is a panel consisting of consultants to deal with what needs to be changed or what options are there to move forward and to keep banks relevant in the new environment. So I'm kindly asking all the panelists to join me. I think there's a mic there, but maybe we can start with you, Andrei, just for a short introduction from yourselves.
Okay. My name is Andrei Burz-Pinzaru. I'm a partner in Deloitte Central Europe and managing partner of Reff & Associates, which is Deloitte Legal in Romania. And for the last 20 years, let's say, the red line in my career has been always around financial services.
Andrei, I'm a Fintech leader at PwC, and basically I'm driving the Fintech agenda for financial services, so innovative banking and financial projects, and I do cooperate or partner closely with startups and scale-ups in the Fintech area because we are running our Collider, which is an accelerator and scale-up hub, mostly with a focus in Central Europe. And I've been in payments and innovative financial services for 20 years, having worked with Citibank, Citigroup, T-Mobile, and some other local and international players.
Thank you. Christian Carstoiu, I'm a partner with EY. I lead the analytics and the digital practice for EY Romania. I've worked about 11 years in the Middle East in Dubai for financial services and retailing companies. Since I returned, I'm really engaged with the fintechs in Romania, with the startups as well, and with the financial services. Very glad to see a lot of things moving here.
Hello to everybody. My name is Piercarlo. I started working for Accenture, then left, joined our consulting company, and then came back to start the strategy practice in Italy. In the last 20 years, I had a global responsibility in the work that we did in the customer space, so marketing transformation, distribution transformation, business model transformation. I left Accenture at the end of October. I reached my age limit in the company and started my own company doing business angel activities and advisory board services.
Thank you very much. I would like to just go to Anna first. There was a quote by Bill Gates which said that banking is necessary but banks are not. He said that in 1994. And the question is, do you think that's still true? That's true today, looking 25 years back? Are banks necessary, or what's your feeling?
Okay, it's more than true, I think. This is what we witness nowadays. And of course, if you look at incumbents providing services and payments, that basically have to be the domain of banks. So I think payments is one of the mostly disruptive area because we have a lot of new players here. And of course, there are these new players, new entrants. So for the banking services, of course, it depends how you define the banking services as well, because this is like a broad portfolio of different financial services included or related as well. But you have these new entrants being, first of all, fintechs, like, just the payments companies, but also payment-related companies. You have the examples all over the globe, but also in Europe, like Klarna, like TransferWise. But then you also have the neobanks and challengers banks. And I think it was the first step towards disrupting or making innovative the banking room, bank space. So we have like, Sterling Bank, you have Monzo, Monese, and 26, just all these European players that you're aware of. And you have, last but not least, you have tech companies. And I think this is the most exciting part of the story, and probably the most dreadful as well. So I'm aware of the survey, just in the United States, that there were some, just banking representatives participating in this survey, and they were supposed to point out, to name one of the most interesting but also most dreadful, just phenomenon. And of course there were some tax, there were some, just regulatory changes, all these factors were involved. But what they named was one single company that are just scared of, which is a tech company, which is a big giant, Amazon. But of course we can't forget the Asian giants. And as Brad King indicated and said, in the morning, of course it can be Amazon, but it can be, just Google. It can be also some of the Asian giants, like, just Ant Financial or Baidu. And I think, just this is a very interesting perspective because, of course, people have to pay, but they don't like paying, of course, they like shopping, so they have to also, just credit this. But then, just for the banking services, you don't need banks anymore. But of course, so there are like, new players disrupting this area. But on the other hand, of course, there are still, just banking services that will be covered by banks. Because apart from payments, there are like, just deposits, of course, and credit, although credit is also a bit, just disrupted by new players. But there is plenty of, services for corporates, for business clients, and corporate finance, for example, and this still will be like the domain for banks. And just trying to sum up it, because this is not like, just we have the perspective that fintechs will take all, or tax, or newer banks. Of course, incumbents, they will still be doing well because they have the stability, security, brand awareness, and everything. And if you also look at the open banking phenomenon, I was also attending one of the events when there was the question asked to the audience, who will benefit from the open banking, new players, fintechs, or the incumbents? So most of the audience said this will be the incumbents, because they already have the possibility to do that. And of course, just even in the multi-banking approach, of course you have to be fast and agile to do that, but still. So I think, just we will definitely have banks and we will definitely have fintechs, and I think we'll cover that in our panel further, so don't have the chance right now, but we will have these bank fintech cooperations models emerging.
Yes, I think I like to make an analogy. I think you all know the stories of the frogs in the water. And so you have the frogs in a pot, then you heat up the pot, and you know that some of the frogs typically stay, and of course they have no future. Some jump and will escape. Forgive me about the simple analogy in an important sector like banking, but I think going forward there will be definitely a number of players which will work inertially, which will be out of the market. I think some will jump, but probably the wrong way, and these are the players which will invest poorly. So there is, as Anna was mentioning, there is definitely a pool of players which will make the right jump. And I think when, in order to compete in this arena, the right jump is all about becoming very central in the everyday life of the customers, meaning go beyond the banking. I think if we look at what we may consider best practices like DBS, like mBank in Poland, like BBVA, ING, JP Morgan, I think they all have a strategy to go beyond the banking, address core customer needs, and then becoming a platform, and now, most recently also, as Brett King was mentioning, being a part of third-party platforms. And the name of the game is really about gaining this centrality.
Yeah, maybe one remark coming from a lawyer's perspective. I mean, at least from one perspective, banks have to continue to exist, which is the deposit-taking part. Yeah? Because it was mentioned, I mean, you know, what we see is fintechs and so on mostly go on the payments side, and that's a reason for that. As long as you don't handle other people's money, the regulatory framework is going to be lighter. One of the key reasons why the banks are so heavily regulated, and you know they have to do provisioning and have to face capital adequacy requirements and so on, is because they handle other people's money, whether retail or corporates, and that's an area that you know for now cannot be tapped into by non-banks. And what we see is also people jumping, you know, trespassing. Yeah, because Revolut started as a payment entity, but then they went for the banking license. Because when you do want to go into that territory, then you do need the license. So for now, that area is legally protected, and that one has to survive. And others were also mentioned, like corporate lending products. Well, even there we could discuss, because we have alternative lenders that are jumping into the arena. Okay, that's for corporate. For retail, we have the phenomenon of P2P lending. Quite big in US, but also growing in Europe, and also lending a bit for the Romanian people in the audience. The particular situation that we have in Romania, with the way non-banking financial institutions are regulated in a manner which is quite similar to banks, like they also have risk-weighted assets, capital adequacy, and so on, is not generalized in Europe. There are other EU countries where you can lend without being heavily regulated. So, in my mind, you know, for now, deposit taking and lending are still somehow prerogatives of credit institutions. I believe lending is going to be the first, it is already the first, that is disrupted by alternative structures of lending. But deposit taking is still there with the banks.
Yeah, I think the first disruption came actually with the non-banking financial institutions, those which are less regulated. So we started with the first little step, but now I think we're seeing the next ones. Christian, talking about the new environment and talking about where banks have to, or credit institutions for that matter, have to carry on their activity, what do you see there, the macro trends? What is the trigger for the changes? Is it technology? Is it just consumer behavior? What do you see, if you look at macro level in this industry, what do you see as the changes?
I mean, it's a combination, right, of these that you just mentioned. I would say, particular, for example, for this time, is the capital superabundance. I mean, right now we are living in an era where we've got a lot of money, a lot of let's say, we're actually looking at $900 trillion in assets, whereby the global economy is about a tenth of this time. So such an abundance of capital lies in an era where the net interest, the interest rates, are zero or negative. So I think the banks right now have a big challenge of investing first of all the money, and of moving towards let's say services which are more of a commission rate. So the fees need to be the next level of revenue for them. And I think there's a plethora of services there that have to be that can be developed first of all, particularly, for example, if I look at the SME industry. I would say another trend, and I'm steering away on purpose from the kind of technologies and consumer behavior, right? Because it's a very obvious, and I think they've been tackled pretty much before me by a number of very smart persons. I think the other fact that we see is what we call extended adolescence, right? So we see a big shift in the family structure. right? Which says people tend to divorce more, right? So the divorce rate is higher, so people stay to stay alone. The education rise and the real estate costs are increasing. So there are a lot of banks, for example, that didn't capitalize on such segments, right? So there is a new customer segment which is rising, or that particular customer segment is expanding. If I look, obviously there is the whole trend of the new technologies, right, which are, for example, around virtual workplace, right? So if I do an analogy with the branch network, clearly most of the banks are reducing their branches, but I think at the same time there can be a particular focus on where the new branch is, or where to move the branches, because branches will still exist for a number of years. And if I look to for example, cities, some of the branches will have to be located outside of the typical traffic streets, right? So the high traffic, right? So people that don't have access to particular, let's say, public sector or different transportation will have to reach some form of banks, some form of retail. And there are a number of, technology, as I mentioned, I don't want to go into it, but I would say there are quite a few trends that are shaping. Consumer behavior is paramount, and consumer behavior again comes from the fact that you've got a number of players, like fintech players, like retail from the traditional retail, which are entering into the market. If I were to mention another big trend, is the rise of platforms. So the platforms are basically places where the owners of such platforms, if I take Alibaba for example, enables the creation of values for the customers without them necessarily having a say in it or having revenue from it. Right? So such platforms create a network effect, and they create a huge loyalty for the customers. Now banks, they operate it typically in a silo, right? They're now opening, either forced by the regulator or because they see that obviously that's the next way. But the platforms, the rise of the platforms is a big shift.
May I add something to that? Because I'm really happy that you mentioned all these changes, or the drivers for changes that are not technologically justified, Christian. And basically, if I add something to that. So, because usually we as industry people, we look at the drivers from technology or regulatory perspective. What are the drivers? Is it regulation or technology? But of course, we have this broader perspective of social demographic changes, and then just one of them, the ecology being like a main trend. And how does it translate to banking or finance? Of course, it has like a powerful interaction, because this is not only about the customer experience, but also just the new customer segmentation. Because of course you are aware that we are not talking about the customer segments in a traditional meaning anymore. So they are not static, they are dynamic, but they are also behavioral. And behavioral, so basically you can create niche, like customer niche, but also very much micro segments, like individual customers based on their behavioral pattern. And now I'm just doing this, link between, ecology and customer behavior, because ecology is one of the very important, or sustainability, basically one of the very important macro trends that can shape industry, financial services industry as well. So I think we can't skip this, just broader view, how basically lifestyle changes the financial services a lot. And of course, this is again driven by the customer experience.
It's not only lifestyle, it's even more, it's personality. There are all these people who are talking about the instant gratification generation, right? Our kids who grew up with plenty of digital devices at hand, which if you want to feel good, post a nice picture on Facebook and you'll get likes. It's instantly you feel good. Yeah? If you want to buy something, again, 2-3 clicks, it's there. So that is changing the mindset of the way of being, if you want, of the next generations. And obviously that's what they expect from banks. My son, who's 21, has an organic disagreement with the idea that you would have to go to the bank in order to get a card. Yeah? He lost his card, so I said, go and get another card. I said, but that means I have to go there, and they'll ask me to fill in forms. And just dislike that, while our generation was like expecting to have to go somewhere and fill in forms. It's a very different mindset.
Thank you. Building on that, Piercarlo, maybe I'll just address this question to you. In what way do you think that rendering banking services under one umbrella, so as a bank, still works now? Especially building on the consumer expectations, of course, different from generation to generation. Because obviously, the way I think about it is that a bank should answer. Any general bank obviously should answer the necessities of all types of ages of consumers, unless a specific bank is focused on only a specific segment of customers.
Yes, I think on the customer side, customers don't care unless they love a brand. I think in the previous panel there was a good discussion about banking brands which are loved and others which are not necessarily loved. So I think this is where the customers stand. On the other side, if we look at your question through the lens of a bank, going forward, I think that digital, or what we are discussing, is creating a huge pressure on the price level. The unit price of every product is under pressure. So if banks want to be profitable and want to make money in this world, and if they have this pricing pressure, banks need to play a volume strategy. And by volume strategy, I mean that they need to multiply significantly the interactions with the customers. And actually, I'd like to talk about the everyday banking concept. We created this 2 or 3 years ago, and actually if we look at a bank like BBVA in its official reporting, they are talking that they are exceeding 1 contact per customer per day. And this is all related to a business model change, because in order to pursue this volume strategy, you need to broaden your proposition, you need to become central in the everyday life of the customer, you need to address the core needs of a customer. So banks, I think, have all the interest to broaden the opportunity to talk to the customers. Of course, play also the omnichannel game, and also work significantly on the branding side, because in order to become an everyday bank, or even like DBS, DBS is targeting 2 interactions per day per customer, then the brand should really stand, even if you are an incumbent bank. And DBS showed that you can change the brand perception even if you are an incumbent and become a loved brand.
From my perspective, it's all about looking from the customer perspective. It's all about making it easy for the customer. I mean, we're humans, right? So we are persons that consume energy, and for us, every activity that is less energy will take precedence across anything else, right? So if I find anything under one umbrella, if I find anything in one app, for example, or in one branch or whatever, right, on one platform, it's going to be easier for me. I will choose it if it meets a particular level of experience, right? So for example, it's trusted, it's easy to do, and so on and so forth. And then if it's there, I will just access it, right? If I need it, I will access it. Instead of actually going on another website, instead of actually opening another app, doing another login and so on and so forth, I would use it, right? So I think from a customer perspective, it makes total sense to have at least a minimum set of services under one umbrella, whether you call it a bank, whether you call it a platform, that is something else. And I think the battle right now is for the banks to be nimble enough from an architectural perspective to add, right? To add or to take out, for example, to replace certain services with others. And also to be able to qualify those third parties or internal for that innovation, for that matter, to be given to the customer, right? It's all about, because if you put it under one umbrella, you also maintain the customer. You don't give it away, right? So white labeling is a great way to actually maintain the customer data and to own the customer. And it's clearly right that in these days, whoever owns the customer has a higher valuation, so the shareholder will love it, as well as the customer.
One remark, because you mentioned about brands and bank brands that are more loved than others and so on. I think generally people dislike banks for a number of reasons, right? It's too high fees for processing my payments, is banks going bankrupt and then I'm losing my money for whatever was not covered by the guarantee fund. And at least in our part of the world, abusive clauses in loan contracts. I mean, these are pretty much the reasons why people may dislike banks. And as opposed to that, you have the payment institutions and the fintechs, which I say the general public trust is quite good there. I mean, if I look at myself, I put, let's say, a good amount of money with Revolut without, the entity, the Revolut entity where I have my money is not, I think, the credit institution, it's the payment institution. I didn't look into their balance sheet or anything. I have no clue if I'm covered by some, insurance and so on. So I assume the people younger than me are even more, tending to trust these entities without thinking too much, because they are there, they're on the internet, they're available, they're, great customer experience because they're all about customer experience, that's why they are so successful. And I'm not talking Revolut, I'm talking generally the online, let's say, fintech association to payments and so on. But I think one thing that this industry should not forget is that there could be bad times hitting them too. And we're seeing that already. I mean, I've seen somebody from our company complaining over Facebook that it has its money with one of these, I'm not going to name the name of the entity, blocked for a number of weeks now. Because they suddenly block your account and say, give us the proof of your funding. So it's not like what the bank does, which says, if you don't update your data by next month, we're gonna limit your access to the accounts. These guys, they directly block you, and then you have to go and give evidence, and then they'll eventually unblock you. Sooner or later, these things, if they're not controlled, they will create also for these newcomers like bad feelings, bad vibes from the user. So customer experience is great, but customer experience is not just about how easy you make a payment. Is also how easy is the KYC, is also not having your money blocked there, and so on. Plus, let's not forget, these entities are also potentially threatened by a bankruptcy, because they have to fund themselves. They may not take deposits from people, but they borrow money in order to fund their activities. And so that's a bit of a risk management there to be considered.
Thank you. That was a very good point, which makes me think actually, is it that we are, I'm just addressing the question to everyone in the panel, whoever wants to answer, but is it like, I think there are two things. One, it seems that we are very much prone into favoring larger entities to develop, like Amazon or Google, who are already powerful. So smaller players seem to have typical barriers when entering the market still. And secondly, it seems like we're still in the honeymoon phase where things have not, they're not so well developed or so large to have an impact, and maybe that's why, for instance, cryptocurrencies, I don't know, they're just being regulated now, but they don't have a systemic impact so that you could see the effects that maybe like 10 banks in Romania would have, for instance, where you would see the whole system failing. So I'm just wondering if there is a honeymoon period where everyone is excited about about experiencing new products, but we haven't been at the other end yet, where there are issues with I don't know, anti-money laundering, fraud, and so on.
I think that's very typical. You know, if you look at the innovator dilemma, it's always been right on the rising curve. It's always about the expectations. It's always about the hype, and then it reaches a tipping point whereby either you've got enough competition, or the cost of acquisition is too high, or just a new technology appears, right, and then you go down, and then it somewhere stabilizes. Is it a honeymoon? Might be. Right. It's very difficult. Right. In hindsight, it's always easier to analyze. In the present, right, it's more or less exploring and doing predictions about what might happen, which they might or might not happen. I would say that if you look at the technologies, for example, like I'll pick up on blockchain, right, which was a very, very big hype around the financial services for the last 7 years. Did it meet its expectation? No, in my opinion, no, right? Because there's been a lot of money, right? There's huge investments in the blockchain, and there's still not that many use cases there, right, deployed, right? There's more around proof of concepts and so on and so forth. If you look at cryptocurrencies, maybe, but if you look at payments, if you look at, for example, the way it disrupted the payments, for sure it changed, right? And it's not a honeymoon, I would say, right? It's a continuous evolution, because technology, frankly speaking, doesn't stand. There is a lot of pressure from neighboring industries, and you mentioned Amazon, you mentioned the Googles, right? You've got a lot of wallet already created, you've got a lot of services on the platform, like for example lending, right, done by Alibaba, which is not really, wasn't really a lending institution at the very beginning. So it's very difficult, right? Everything is evolving, and it's evolving quite fast. That you can't really say a technology that was 3 years ago, or a company that started 3 years ago, it's actually the same company now after 3 years. Banks are not, going back to what Bill Gates said, banks 25 years ago aren't the same banks that are today, right? Same as the fintechs that were there, right, weren't there at all. Right now they're away chunking at all these kind of banking services, right, the lending and mutual funds investments and so on and so forth. So it's a very evolving scene that we're getting on.
And just one comment, coming back to your question, Claudia. So you don't have to be big to be impactful. So impact is not doesn't equal scale. So I think just of course Google and Amazon and other big tech companies, they are definitely impactful, but they also have scale and they are big. But there is a lot of examples of the fintech companies that they operate in a niche market and they are impactful. And I think this is one of the lessons that banks can learn from fintechs or any other innovative companies. And I always say that you can find a niche, and of course, this niche should be global, but still, the niche can be really impactful. If you look at the services you can provide to 10% of the population, even less than 10% of the population, either it's like, just organic food, it's not a niche anymore, but still it is. But they're also disabled people, they need like, just some, kind of services. And, I'm aware of many of the examples that we don't have much time to quote right now of the companies, tech companies, that provide such, just services for less than 10% of the population, but globally, or at least, just across Europe. So I think this niche approach, because if you see, again, I'm coming back to the segmentation, the customer segmentation. If you look at what banks have been traditionally doing as like these large silos of clients, like consumer or affluent, premium, and then just high net worth. This is kind of retail, and then have micro and medium and SMEs and corporate and large corporate companies. But then, and what they learned already, they can start distinguish between these segments being very specific. So create these micro segments like freelancers in the micro companies or any other, professions that you can just approach or address your segments with a specific portfolio of services. So I think niche can be a really powerful tool and powerful market, and then very impactful.
Yes, and if I may build on this, I think a very, very critical process for banks is the investment allocation process. Because if we agree that there are three major buckets, so one which is all about transforming the core, one which is about growing the core, and then there is the most critical, at least in my experience, process, which is about investing in the new. And we had references to a number of options, but really you banks are facing hundreds of potential investment buckets. We talk about blockchain, really artificial intelligence, and the likes. So at least based on what I'm seeing, I think that the most critical focus area is first of all about how much to allocate to this new, to the so-called new. And by the way, in my opinion, you can do a lot if I look at all the leaders just allocating about 20% of the investment budgets. And then within this 20%, which where to prioritize. And this really depends, of course, on the strategy and on the history of the bank. But this is probably, in my experience, the most critical focus areas in order to create the foundation for the future.
Just picking on the honeymoon metaphor. I don't think it's about the honeymoon. I think it's more like, because honeymoon general wisdom says it's a bit idealistic, it's short frame, and it's usually followed by facing the reality, right? So that's why you call it a honeymoon. And I'd rather say is we're at the stage of the beginning of a beautiful friendship. Yeah, that's what it is. When fintech started to rise a couple of years ago, there was this question that fintechs are going to disrupt the banking environment, they're going to take over, it's the end of banks, and so on. And that reminded me about a lecture that I read 7-8 years ago. There's a famous author amongst lawyers, it's called Richard Susskind, and he's been writing maybe a decade ago a book that's called The End of Lawyers. And his claim was, because of the rise of technology, it's going to be the end of lawyers. And 10 years later, the lawyers, fortunately or unfortunately, are still here. Yeah? And it was similar with fintech. Yes, fintech is here, the banks are going to go away. And then 1-2 years later, the reports from the Deloitte and the other consulting firms started to pop up and saying, well, we actually think it's more of a synergy here. It's not about one taking over the place of the other. I was reading a report from EBA that has been issued in June this year about, let's say, interaction between payment institutions and fintech. And while on one hand it says payment institutions are like taking part of the business of the banks, the payment business. Yeah. On the other hand, payment institutions are quite concerned about the big data companies. Banks are also concerned about the big data companies. So, we may see actually an alliance between, banks and the more, advanced technologies used by some of the payment institutions, which are actually fintechs converted into payment institutions in a way. Yeah? They took a license at a certain moment. So, banks having to face the big data companies coming into banking are actually, in my view, going to find the benefit in working together with the fintechs and help get some innovation into and allow the banks to leverage on their own advantages. And they do have certain advantages. They're able to manage risk. they have a large customer base, they have experience in certain things. So actually, why not seeing the banks, as I said, going hand in hand with fintechs, and that's happening. Some banks actually have an M&A policy about fintechs. They actually buy fintechs and incorporate them in their ecosystem. Others are making partnerships. And definitely they do like to talk to each other because maybe they need each other.
Thank you very much. I think on this question we can build maybe on the next one, which would kind of touch directly upon the name of the panel today, and that is just to address what would a current bank have to do to stay relevant. And I'm talking about that because technically every bank has been a startup, of course, hundreds of years ago, but that time has passed, so now they are mature companies. But
they kind of forgot that.
I think they forgot that, but I think everything started. I mean, obviously, a few hundred years ago, when we talked about the first bank, it was the same disruptive, probably, effect. Now enhanced by communication. But I think maybe if we can just, any of the panel members, if you can just summarize what in your view would be the steps that bring the banks to a, let's say, position where they would, looking into the future, remain relevant and not just as support systems for whatever other technology entities moving on.
Throw a couple of elements and then we build. So I think first of all, we need to quantify what is relevance, and as I was mentioning, I like to use the simple KPI of having 1 or 2 interactions per day. Again, assuming that you are backed up in terms of a business model. And the second observation, which I think is very important, but for the moment in the session we did not talk much, is about becoming an empathic bank. So the world is turning digital, but we all know that the best physical salesperson, the best relationship manager have a great capacity to know well their customer, what they want, what their aspiration, and so on. So in this digital world, where physical interactions are shrinking, there is a big risk to have transaction with the customers. So I think it is extremely important to aspire to be an empathic bank also on digital properties. And by empathic bank, I don't want to cover the theory behind, but the people expert in psychographic analysis tell us that there are 18 variables behind each human. So for instance, somebody like to make a fast decision, so you must be prompted with a 24-hour expiring offer. Other people may like to read 10 pages. If they don't read 10 pages, they don't buy anything. Some people want to be recognized as an individual. Some people like to be challenged with the people like me. They like to know how people like you behave. So back to your question, the final remark is in order to be relevant, you need to have a KPI, but you also need to work on the empathy online. And among the powers of artificial intelligence, there is definitely this space about psychographic analysis, which is able to make digital interactions fully personalized and human, exactly like the best relationship manager would do.
Yes, I had to definitely add something to that, because I have these two words coming from the traditional banking and then working with fintech startups, and in my current role, of course, I still have these two words, just banking financial services clients on one hand, and on the other fintech startups and scale-ups and PwC in between, which is still a corporate entity. So basically, just as Andrei said, this is no longer the question of if, of course, because we still remember the debate, if fintech is a friend or fintech is a foe or an enemy, but there is no such a discourse, anymore. Basically, we ask the question how we can work together, how we can cooperate, and that's why there are different collaboration models emerges. There are partnerships, but they are also joint ventures, they are acquisition and so on. So there's the question of collaboration. And of course there's a lot of things that banks can learn from fintechs, as I already pointed out some of them. Definitely the customer experience, how you approach customer, how you understand the customer behavior, how do you understand the customer, also the customer experience market fit, so the niche as well. So it's a lot of things. So definitely, just to sum up, and what I have been witnessing so far is that with all the developments of the markets, fintechs, they will become more bank-oriented a bit, or at least some of them, like neobanks. There will be more standards in the market. There may be more regulatory pressure, but also stability, compliance, and so on. So they will a bit, just evolve some of them in this formal way. But on the other side, banks definitely they become more and more fintechs and fintech-oriented. I mean incumbents. And by that I mean, how they drive and how they deliver innovation, how they apply technology, how they build use cases, how they understand customers. So I think it will be this two-side partnership, or even in one of the PwC reports we called it marriage, but not for rather like a rational transaction. So it will be more of these partnerships and mutual collaboration, and also just bankings moving towards fintechs and fintechs towards incumbent word.
I would use a powerful word in a way, and I think for the banks to be relevant for the next years, they have to be humble, and I apologize for some of the bankers there, right? But sometimes I feel that whenever I talk to some clients of mine, right, that they're in a bit of an ivory tower, saying that they know best, right? That they know exactly how the industry works. They've been there, and they can produce pretty much all the services in-house. I think by being humble and accepting the fact that once you don't hold all the knowledge in the world, second is that you don't have the capacity internally to develop it, and third, the paradigm of buy versus build is pretty much already set, right? So the story is around buy, right? I mean, building stuff, yes, it might be for some core competencies, but collaboration, right? And when I say buy, it's about collaboration, it's about opening up the platform to a lot of other services, which obviously need to be vetted before you actually allow your customers to interact with. So they have to be around cybersecurity, around ML, KYC, and so on and so forth. But it's around really realizing that going forward, the expectations of our clients and the clients of our clients are changing so fast that we have to be very, very nimble. We have to be very agile in the way we interact. And we can't do it alone, right? As a banks, you can't do it just within the ecosystem or within the small ecosystem that we have right now, right? I mean, some of the reports say that around half of the banks are digital laggards. And by digital laggards, I mean that they don't even started some of the digital initiatives, right? They talk about digital initiatives, but they really haven't done much. And I don't want to talk more, right? But hopefully we'll have the chance later to talk also about the things that we do in our back office, right? In our operations, because Andrei mentioned about for example, some of the accounts being blocked. I mean, you might have a great customer experience, but if you don't work on your internal operations, on the bank's internal operations, optimizing, changing them, removing what's not needed, then at a certain point in time, it's going to be a huge disconnect between front office and what you can actually do.
I think the answer to your question, Claudia, is like what should the banks do to stay relevant is right in the title of the event, is to embrace change. Yeah? And it's very easy for that to sound like a slogan. Yeah? It's a nice slogan. we embrace change, so we're going to be the champions of tomorrow, and it's going to be great. Yeah. Now, when a bank would say they embrace change, an interesting question would be, so do you have a digital strategy? Or how do you embrace change? Well, we have a digital strategy. I wonder if in the future, are we still going to talk about the digital strategy? Or is going to be a pleonasm? Yeah? Because we are in a digital economy, so why even talking about a digital strategy? Strategy includes the digital element. You can't say we have a strategy and part of the strategy we have a digital stream. Yeah,
post-digital strategy.
Yeah, exactly. Yeah. And Anna mentioned, the banks have to think about how to, embed the fintechs and cooperate and so on. I fully agree with that. It was also mentioned about the banks being like humble and picking on a quite well-known author, Simon Sinek. Maybe before asking ourselves, or the banks before asking themselves how, they should ask themselves why. Why do they need to embrace technology? Why do they need to cooperate with fintechs and so on? Because as long as you don't give an honest and deep answer to that, you're going to treat relationship with fintechs as something that we have to do amongst others. And then, and that's personal experience, you go with a fintech to a bank, and the fintech has this idea, and then the person from, I don't know, retail or corporate would say, that's interesting, but in order to advance, you need to sign an NDA, and then we need to have some sort of cooperation agreement and so on, and then they send you to compliance. Now, the guys at compliance, they're doing their job, but nobody told them that, cooperation with fintech is a priority. And you should pay special attention to that. So they deal with this fintech as they would deal with any supplier, and they just try to put you between the blocks that they've been used to, or the boxes they've been used to. Now, to me, that means that that bank may have a digital strategy, but they don't have a work with fintech strategy. Yeah. So, which to me again means they didn't ask themselves the question why. Why is it important for us to cooperate with fintechs? And Brett King, I'm sure I was not in the audience, but I'm sure he gave the hint about the Alibaba and taking over the banking system by storm. Yeah. Well, that could be an answer for the banks. That's why you have to work together with the fintechs, because otherwise, you might just be taken over by something else. And again, Brett King comes and says, well, we have to have these like fundamental principles thinking. Yeah? Not just augment what we have, but rewrite everything from scratch. Well, my view is that, a newcomer, if Amazon wants to go banking, they can do that. But if a bank wants to do that, it cannot do that. It cannot afford to rewrite everything from scratch, because as we learned in high school in physics, if you're on a platform, and the platform is moving, you don't even see that it's moving because you are on the platform, yeah. So you see the exterior change, but the guys near you, they stand, yeah. And you can't just remove the wheels of a train while it's going. So my view is you cannot rewrite everything from scratch in a bank, yeah. So it's got to be a mix. You adopt innovation, and that's why working with third parties is good, yeah. But you still have to keep the train, on the railroad, because otherwise the central bank is going to withdraw your license or whatever.
Thank you, Andrei. Very passionate talk. He's passionate about fintech. You can tell that. Claudia, do you want to open the questions to the floor?
I think, thank you very much to all the panelists. That was a very interesting debate. We didn't have time to cover all the questions, which I thought we would. But if anyone in the audience has any questions?
Oh. The main organizer. Okay.
No, not acceptable.
I have actually two. Speaking about the migration from banking products to banking experiences, it's obvious that banks need models in their business digital transformation. Should they copy companies like Alibaba, Amazon, Google, or there are good examples among them? I mean, Spanish banks, BBVA, for instance, could be an example. That's my first question. And the second one, we are talking about what banks should do to become relevant. Okay, but how do you see the future of fintechs as banks? Thank you.
can I have a first shot at answering before everyone answers more competently? I mean, just as from a lawyer's perspective, I don't think it works that you just copycat fintechs. I just think they have to find their own ways, because there are challenges ahead also from a legal perspective looking at what they are doing. And I think that's one of the items to take into account. I don't think copycat is good. I think just the approach of being open and of being maybe more customer-centered, that's something to learn from. But I think that the way ahead should be more tailored.
Take the first one also, because I had the opportunity to work a lot with BBA. First of all, let me stress that banks have some unique positions. First is that have already millions of or hundreds of thousands, depending on the situation. In any case, there is a huge customer base. Second, all surveys say that while on trust there have been issues, banks are by far the most trusted player when you talk about managing personal data. We have surveyed this extensively across geographies. In every geography, banks are the most trusted partner when you talk about sharing data. And we have discussed in the morning about the importance to build the strategy around data. Third, but not least, banks in any case have a physical footprint that in several geographies, for sure in Europe, especially in the central and the southern, is still relevant. Of course, we talk about substantially less branches, different, but this footprint is still there. So BBA, I think it's difficult to compare countries and immediately apply it. But for sure, I think the best banks in the world include BBVA, DBS, mBank, ING, JP Morgan. What is unique about BBVA, which I think is replicable everywhere? BBVA has a clear strategy to become a trusted player, because they know that if they are trusted, people will give more data, and of course if they have more data they can better personalize the service. To do this, they are launching, to multiply the interaction and to be trusted, they are creating a portfolio of new initiatives, like on housing, on car, on health, on traveling, and so on. And now are very active on third-party platforms. For instance, the agreement with Uber to provide the card. So I think net there is definitely a way for each institution to build on the success stories of these 5 players and find a business model which is working in the home country. Building a lot on this trust circle, because for banks to succeed it is important to have not only the trust on data, but really a broader sense of trust from the customer.
I would add to that, I totally second that. I would add, there are 2 words, right? One, it's about execution. So the banks, as any other organization, they need to execute, and they need to basically go through from the very designing to the actual completion of a project. I see a lot of the initiatives, not just in the digital space, but mostly in the digital space because it's new, because people haven't been exposed to the challenges of a digital project. But most of the initiatives, the digital initiatives, are somehow stopped in the middle, right? And we're talking here about initiatives that have some sub-projects, right? There are a number of things, right? You need to retrain your customer, you need to retrain your employees, you need to do campaigns to your customers, you need to change services and so on and so forth, you need to change platforms. So there are a number, right? And some of the banks, because of the, let's say, internal issues, because of capital, because of other regulatory projects taking priority, they somehow stopped. And then obviously the return of investment is not there. So the digital has failed. It's not yet failed, it hasn't been executed. I think that's a very valuable lesson that I learned as a consultant. And second is consistency, right? So adhering to a digital strategy, let's say whatever digital strategy, at least be consistent and follow it through for a number of months, if not years, right? Changing all the time a strategy doesn't make it a strategy anymore. It makes it more or less, let's say, live and do stuff, right? It's not strategy. It's meant to actually have a roadmap, put some capital behind it, allocate resources, free them up from business as usual, and start executing it. I think these two, if these two are met, most of the banks will jump ahead much faster than where they are right now.
So just answering the first question, no copycats, that's for sure. No easy lessons, but you can still learn a lot from the big tech, for example. If you look at Amazon, so basically past years, every year they acquired a new company just to bridge the gap in their competences. And if you look at what they are doing in terms of the horizontal integration, so instead of using, they use delivery company, but then they build their own one, and they just close end-to-end the value chain of just shopping but also delivering goods. And this is only one of their business, because they are also in AI, in just in drones, in vehicles, and in many different areas. And of course, this is a lot of lessons that you can learn from the big tech, but not only from the tech companies you mentioned, because we are global, we are in the global markets, but then you can't forget the local perspective, and still you have to have the local or localized strategy. And let me give you the example of mBank, which is like the first digital-only Polish bank, and it was founded in 2001 or 2002, so like almost 18 years ago, and without any branches. Then they start growing. Of course, they are active in or operate in Poland, Czech, and Slovakia. And basically, there is another one, Alior Bank, which was founded from scratch, literally from scratch, like 10 years ago, and now is one of the leading banks in Poland and also in the region, owned by the big insurance company PZU nowadays. So there are some examples of the companies that just basically applied just the best of the global strategies to the local markets.
Always have to be short. Fully agree that copycat is not the solution, and one argument also from let's say legal/regulatory perspective, banks have the obligation to do proper reputational risk management. Yeah? Which a fintech that's not necessarily regulated so does not. And I remember, I don't know if it's true or not, if it's an urban myth, but what I've heard is that Uber, for example, had or still has a policy of putting money aside when they go into a new jurisdiction where they know there might be legal challenges, they know that maybe it's borderline legal what they do there, but they take the risk and they say, okay, if it's necessary, we're going to litigate. Okay, it's a type of very aggressive approach, which is actually helping the development because it's forcing that jurisdiction to actually adopt technology and so on. But it's something that a bank would never be able to do because they cannot afford to take consciously a decision that they may have a concern might not be fully in line with the law. The bankers would risk losing their license. What a bank can do, however, is to make sure that the way they look into the law is flexible enough, is innovative enough. They don't take the safe, they have to take the safe approach, but not always the conservative approach is the only safe approach. Yeah? So that's the distinction that they have to make. And other than that, maybe not copycat, but definitely inspiration. I think the banks started to realize that they sit on a lot of data. It was mentioned, they are trusted for handling data. So, just looking at how, Facebook and Amazon and so on make money with data, yeah, by the mere fact that they have data and they know how to monetize that. That's something that the banks, in my view, can get inspiration from.
And the second one, operation, how do you see the future of fintech as banks?
Some of them will convert and some of them have already acquired the banking license. I think the example of Revolut is the most obvious, yeah. But other than that, it's a matter of the strategy of those individuals. Do they want to go into activities for which they need a license or not? If they don't want to go into deposit taking, but they want to go into lending, they have to make sure what type of lending and where, and do I need a license or not, and do I need to be a bank or not?
Just to make it short, just to transform the quotation from Brett King today in the morning. So there will be like technology company, and there will be technology company with a banking or payment license.
Good. Thank you so much.
Thank you very much.
Thank you.